Stop what you are doing. The Underused Housing Tax was cancelled in March 2026. You may have heard the news. You may have assumed the issue was resolved. You may have moved on. That assumption is costing Canadian homeowners thousands of dollars right now, and for some, it is reaching $10,000 per property. On a tax that no longer exists. On returns that were never filed for years, the government says are still fully enforceable. The tax is cancelled. The penalties are not. Today, we are going through exactly who is still at risk, why the cancellation announcement is the most misunderstood piece of tax news Canadian homeowners have received this year, and the one action that is the difference between a penalty that disappears entirely and one that reaches $10,000 per property, with no cap on how many properties it applies to. But before I get into it, I am Mike. This channel exists for one reason: to make sure every Canadian homeowner never pays a penalty they did not know was coming. Subscribe and turn on notifications right now so this information always reaches you before the CRA does. And first, tell me in the comments right now, did you hear about the Underused Housing Tax cancellation in March 2026? And did you assume that meant everything was resolved? Yes or no? Drop your province below, because the gap between what the cancellation announcement actually said and what most Canadians heard is the exact reason this penalty is still catching people off guard. Walter is 67 years old. He retired after 30 years as a mechanical engineer in Halifax, Nova Scotia. He receives CPP of $1,040 a month and full OAS. He owns his principal residence in his own name. He is not a real estate investor. He is not a foreign owner. He is a Canadian citizen who lives in his own home. He also owns a rental property in Dartmouth that he purchased 15 years ago. When he bought it, he set it up inside a numbered company on the advice of his accountant at the time, a common structure used to limit personal liability on rental income. He has not thought about the corporate structure in years. The rent comes in. The expenses go out. His accountant files the corporate tax return every year. When the Underused Housing Tax cancellation was announced in March 2026, Walter read the headline, "Tax cancelled." He moved on. What the headline did not say, what nobody called Walter to explain, was that the cancellation applies to 2025 and every year after it. For the 2022, 2023, and 2024 calendar years, the filing obligations, the payment obligations, and the penalty structure are still fully in effect. The numbered company holding Walter's Dartmouth rental property was an affected owner under the Underused Housing Tax from the moment the tax launched in 2022. 3 years of missing returns, 3 potential annual penalties per property. For corporations and non-individual ownership structures, the minimum penalty per missing return is $10,000 per year, per property. 3 years, 1 property, $30,000 in potential penalties. Not because Walter did anything dishonest, not because he was hiding income, because a tax that most Canadians had never heard of silently applied to a corporate structure he set up 15 years ago, and the cancellation announcement that sounded like the end of the issue was actually only the end of the issue going forward. And the worst part, Walter is not unusual. Across Canada right now, there are homeowners, landlords, cottage owners, and estate planning families sitting inside the exact same penalty window, believing the cancellation resolved everything, not knowing that 3 years of prior obligations are still open and accumulating. Now here is where it gets really interesting. And honestly, this next part is the reason I made this video. The penalty is significant, but it is not inevitable, because the CRA has built a specific relief mechanism into this situation that most of the people affected have never been told about. And the window on that relief closes the moment the CRA contacts you first. Tell me in the comments right now, did you know the UHT penalty for prior years survived the cancellation announcement? Yes or no? I am reading every single comment. Let me show you exactly who is at risk, because the affected owner category is significantly wider than most Canadians realize. And some of the people sitting inside it right now genuinely have no idea they were ever included. The underused housing tax was designed around two categories of property owners: excluded owners, who had no obligations and never needed to file anything, and affected owners, who were required to file a return every single year, regardless of whether they owed any tax at all. Most individual Canadian homeowners who own property in their own name, who live in it or rent it out in a typical way, are kostor that DD indivis alter offorsart autostor, those are excluded owners. They have no obligations. They never did. But the affected owner category includes several situations that are far more common among ordinary Canadian families than most people realize. Canadian citizens and permanent residents who own residential property through a corporation, even a small numbered company or family holding company. Affected owners, required to file every year since 2022. Canadians who hold property through a trust, including a family trust, an estate that has not yet been distributed, or a bare trust arrangement. Affected owners, required to file. Partners in a partnership that owns residential property. Affected owners, required to file. And here is the specific situation that is generating the most confusion right now. Bare trusts. A bare trust is a legal arrangement where one person holds legal title to a property on behalf of another, typically for estate planning purposes, for adding an adult child to a title to help with a mortgage application, or for holding a property for a family member. Bare trust arrangements are extremely common in Canada. Most of the people who have them set one up on the advice of a lawyer or financial planner years ago and have thought very little about them since. Under the Underused Housing Tax rules, bare trust arrangements that hold residential property were classified as affected owners, required to file every year since 2022, regardless of whether the arrangement was entirely between Canadian citizens, regardless of whether the property was the owner's principal residence, regardless of whether zero tax was owed. A Canadian senior who added their adult son or daughter to the title of their home 5 years ago, purely for estate planning convenience, may have been sitting inside an affected owner filing obligation since 2022 without knowing it existed. Now let me give you the exact penalty numbers, because this is the part most coverage is not explaining specifically enough. For individuals who are affected owners, the minimum penalty for failing to file a UHT return is $5,000 per year per property. For corporations, trusts, and other non-individual ownership structures, the minimum penalty is $10,000 per year per property. Not $10,000 total, $10,000 per year, per property. A corporation that held a rental property and missed the 2022, 2023, and 2024 filings is not looking at a $10,000 penalty. It is potentially looking at $30,000 across 3 years on a single property. If the same corporation held 2 properties, $60,000. These are not theoretical numbers. They are the penalty structure written into legislation that is still fully in effect for those 3 calendar years. Now here is the part that changes everything for people who are hearing about this for the first time right now. The CRA has confirmed that penalty and interest relief is available for affected owners who voluntarily come forward before the CRA contacts them. This is the Voluntary Disclosures program. If you have missed underused housing tax filings for 2022, 2023, or 2024, and the CRA has not already sent you a letter or opened a review, you may be able to file late returns and have the penalties and interest reduced or waived entirely. But the window on this relief closes the moment the CRA makes contact. Once they send a letter, once they open a review, once they approach you first, the Voluntary Disclosures program is no longer available for that obligation. The penalties apply in full. This is why timing matters more right now than at any previous point since the UHT launched. The homeowners who act now, before the CRA comes to them, have options. The homeowners who wait until a letter arrives have significantly fewer. Let me show you what this looks like across 3 different situations, because the most common scenarios affecting Canadian homeowners right now are not dramatic cases of deliberate tax avoidance. They are ordinary family arrangements that nobody flagged as a compliance issue at the time. Scenario 1. A rental property held inside a numbered company. Walter's situation. Canadian citizen. Legitimate rental operation. Corporate structure set up years ago for liability protection. Never connected to a tax filing requirement that launched in 2022. 3 years of missing corporate UHT returns. 3 times $10,000 per property. Potential penalty $30,000. Through the Voluntary Disclosures program filed before CRA contact biturichi potential penalty $0. Scenario 2. A family cottage held inside a family trust. A Canadian family set up a family trust to hold their Prince Edward Island cottage 20 years ago for estate planning purposes. The trust arrangement was designed to simplify the eventual transfer of the property to the next generation. Nobody at the time of setup anticipated a tax that would launch in 2022 and require annual trust filings for a property that was occupied by the family every summer. 3 years of missing trust UHT returns. 3 times $5,000 minimum per property for the trustees as individuals, or $10,000 as a trust entity. Potential penalty $15,000 to $30,000. Through voluntary disclosures, potentially $0. Scenario 3. An adult child added to the title of a parent's home. A Canadian senior added their daughter to the title of their Toronto home in 2019 on the advice of their estate lawyer, a standard bare trust arrangement designed to avoid probate and simplify the eventual transfer of the property. The senior continued living in the home. The daughter was added to the title only. From 2022 onward, that bare trust arrangement was an affected owner under the UHT. 3 years of missing returns. Potential penalty $15,000 to $30,000. Through voluntary disclosures, potentially $0. 3 ordinary family arrangements. 3 penalty windows that are still open right now, and 1 relief mechanism that is available before the CRA finds each of them, and unavailable after. Canadians who work with tax professionals who were closely tracking the UHT when it launched in 2022 were notified. They filed, their returns are clean. Their penalty exposure is $0. Most Canadian homeowners with corporate structures, family trusts, or bare trust arrangements navigated the past 3 years without anyone looking at the complete picture of what the UHT required from their specific ownership situation. You are seeing the complete picture now. Here is exactly what to do before the end of this week. Step 1. Think carefully about every piece of residential property you own or have any ownership interest in across Canada. Your principal residence, a cottage, a rental property, a condo held for investment, any property in any capacity. Step 2. For each property, ask 1 question. Is title held in any way other than your own individual name as a Canadian citizen or permanent resident? If title involves a corporation, a numbered company, a trust of any kind, a partnership, or any arrangement where another entity holds legal title, you need to investigate further. Step 3. If any property ownership structure goes beyond your own individual name, contact a tax professional today, not at the end of the month. Today, ask them specifically whether your ownership structure created a UHT filing obligation for 2022, 2023, or 2024. Ask about the Voluntary Disclosures program. Act before the CRA contacts you. Step 4. If you have added any person to the title of your home in the past 10 years for estate planning, for mortgage purposes, for any reason, ask your lawyer or estate planner whether that arrangement constitutes a bare trust and whether it created a UHT filing obligation for any of those 3 prior years. Step 5. Share this with any Canadian homeowner you know who mentioned the UHT cancellation recently and assumed everything was resolved, who owns a rental property inside a company, who has a family cottage in a trust, or who added a child to their home title in the past several years. The cancellation resolved the future. It did not resolve the past. What is the one thing from this video that surprised you most? Was it the fact that the cancellation only applies from 2025 forward? The $10,000 per property per year penalty for corporations? Or the bare trust situation that is catching so many ordinary Canadian families off guard? Drop your province and your answer in the comments below. I read every single one, and if this video helped you, hit the like button right now. 1 second. It is the only way YouTube shows this to the next Canadian homeowner sitting inside a $30,000 penalty window they do not know is still open. Walter is working with his accountant on a voluntary disclosures program filing right now for the 3 years of missing corporate UHT returns. The penalties may be reduced to 0. He has options because he found out before the CRA found him. He said to his neighbor afterward, "I read the headline. Tax canceled. I thought it was done. Nobody told me there was a 3-year window still open underneath it." That is exactly why this video exists,